What is mobilization funding?
I want to tell you guys a story about a client of ours. He came to us early on at Mobilization Funding. He had a great business. It was successful, but he had major cash flow problems. The cash flow problem was he had a lot of work to do, but didn't have any cash to execute on it. In the construction world, many of you understand and know, without cash, it's really hard to start a project. This particular gentleman had no cash because of tragedy. He had issues with different jobs that went well and he finished. However, partner issues inside the business added a lot of extra tension and drama to what was already a really tough and hard business to manage through, particularly early on. Unfortunately, several months into the business, or several months after some of the contention, one of the owner's sons died tragically crossing the street. I tell you that story because obviously that caused a lot of pain. And that pain led to some pain in the business too. And what ultimately happened is while that owner grieved, recovered from that tragedy, the business suffered and just kept going on. Now, regardless of what causes the pain for the business, as the business ultimately went into bankruptcy, couldn't finish jobs, had bad outcomes with cash, accounts payable, vendors, and reputational risk, the owner always maintained his own reputation, and he was a very, very stand-up guy. After about a year, he came back to the business, and that's where we met Mobilization Funding. I promise I'm going to tell you the rest of the story and where this gentleman is now, but I want to give you some insight into how this business of Mobilization Funding and myself got started. About 6 years ago, I got a phone call from a really good friend of mine who had an idea to start the business. And he said, "Hey, Scott, listen, this is going to be unbelievable. We're going to make loans to subcontractors in the construction business, and we're going to be able to help them get started, and it's going to be great, and they'll pay us back when they get paid." And candidly, I said to him, "You're absolutely out of your mind. I'm not going to lend any money to a subcontractor, particularly my own money, and think they get paid back." And why would I say that? Well, my father had a subcontracting business for 25 years. He was a commercial glazer, which many of you may know, and for those of you that don't, they basically install glass and aluminum windows. So if you see a whole storefront at a shopping center, all the glass, insulated glass, aluminum, doors, etc., put all those in. So I spent many, many, many years growing up in childhood, summers between college, summers in high school, working with my dad in the field, on those job sites, which, by the way, I live in Florida now. As you can see, it's sunny out in February or March here. But in upstate New York, it's very, very cold. And in the winters, it was all aspects of weather you could deal with. In that business, in the time I spent there, I knew what it was like to be in the field and what the laborers were like. I knew what it was like to have owners of the business. I knew what it's like when my dad opened his own business and left being just a laborer and started the business, and I saw and dealt with all that pain, and I knew what it was like to borrow money, and I watched him borrow money and try to start jobs, and it was very, very difficult. So I tell you, when I said to my friend Chris, "You're absolutely out of your mind, I'm going to lend money to that," it was because of a place of experience but also ignorance. And so when he came to me, I said, "You know what, I'm interested, so tell me a little bit more about it." It was really, he was working with the surety bond world. Now, give you guys some context. This is after the recession. This is 2013, essentially. So a lot of stimulus is going into the economy, a lot of different projects. Banks weren't providing any more funding. Sureties were trying to write more bonds. But the issues and the problems around the surety world is they couldn't get anyone to approved for a bond because there wasn't any access to capital. So some of the bond world came to my friend and said, "Look, if you could create a loan program that could give some of these commercial subcontractors some working capital up front, it would really, really help us provide these bonds, and we could protect you guys by keeping the money from on the job and staying on the job through our new funds control process." Now, we could talk about funds control in more detail and maybe at a later time, but for those of you that do know, you understand it. Those of you that don't know, funds control is essentially the surety bonds world way of just keeping the money on a project from leaving a project. The old adage, borrow from Peter to pay Paul. So in that concept, it resonated with me. I said, I remember watching my dad move money from one job to the next job or just use cash to go wherever. And then if it all worked out perfectly as he imagined, there wouldn't be any problems. But when it didn't, it would cause problems for a specific job. So I said, that's going to make sense. If we keep all the money on the job, that job can go really well. And if we provide money to the subcontractor at the beginning of the job when they actually need it, they're going to be more likely to be able to execute that job. And then when they invoice and get paid back, I see the concept. We could get reimbursed what was already paid for, and it's a loan in the form of working capital for that project. I actually understood the concept, and so I agreed. Me and 3 other friends decided to put in some of our own money. We made a very small loan to an electrical contractor, and it worked out really well. So the idea of it proved fruitful. So we said, all right, well, let's do it again. And then we found a concrete subcontractor working on a big parking garage for a residential complex, a new residential complex. We did a loan for the parking garage, and guess what? It went great. And then that particular client got another contract to do the actual apartment complex. So we did it again, and guess what? It went great. So we've done these series now of 3 loans that we saw from start to finish. And frankly, it was more of a hobby for us. There was one gentleman who really did all the work. I sort of just watched from afar. Well, what happened is, as we learned on those 3 projects what to do and the mechanics of it, kind of coming from the bond world, what I learned, and I didn't realize I would learn, is I really learned a ton from those 2 particular customers, and the 3rd and the 4th one that came on afterwards. I learned that, like subcontractors are much more like my dad than they are the impression that I've heard from all others. I thought my dad was an exception, and he is in many ways. Don't get me wrong, I love my father. But from a subcontractor perspective, he's very similar to everybody else. And what is that? They do great work. They're there to work hard. By the way, they work a lot harder than most of the people I ever worked with in corporate America. They show up every day, and they bust their ass. And in doing that, I realized, these problems that are on these projects and these problems that are in these jobs, they're really not a problem with the people or the individuals. They're a problem with the function of how cash works and the management of cash on a job. Construction is a brutal business, and growing your business, whether it's construction or manufacturing or other, is just as difficult in many ways. You can get work, but nobody wants to pay you for that work or give you any money associated to it until you actually finish the work. Makes sense. But you need money in order to make money, the other adage. Well, it's true. And so what I learned is, there's good people here that are out to perform, and we can underwrite the fact that you have a good person, they want to do a good job, they know how to do the work, and if you just give them the cash to help them execute it and do it in a responsible way that A, helps them, B, allows them to pay it back when they get paid back, and you put a little bit of discipline around that too in the form of your own banking ways, meaning like there's rules and guidelines as to how you can use the money so that you can protect yourself, but also protect clients from being in a bad spot and doing something that they don't intend to do bad, but it just works out bad. And so if we did all those things, it really gave me the idea that there's a business here to create more than just a hobby with 3 other friends. And so really that was the creation of the loan program was born. The questions we had out there were like, we actually help all the business owners out there? Can we fix the problems for subcontractors and other business owners? Do we provide them the money when they need it, which is at the beginning of the job? Can we use their contracts or purchase orders to secure a payment for us and for them? Can we help them do the job better and more efficiently? When we do secure the payments for the job, are we going to help them actually make sure they can get paid too? Because there are bad people out there on all sides of this cash flow problem, whether it's the owners, whether it's the banks, whether it's people who don't do good work or others. The other questions we had is, can we help them do the job better and more efficiently? Can we do all these things and make sure the business is left far off better for working with us than not working with us? Can we be repaid the same time the owner gets paid? Can we relieve stress and anxiety for that business owner and allow them to have more peace while doing what they are good at, while they're performing the work? I leave that one for last, and let me tell you why. What I noticed is you have this cash flow problem and you have this business owner, and it's all manageable. But what isn't manageable is the massive amount of stress that goes with making payroll every week, ordering the supplies, the pressure from the job itself, the GC, all stuff that's going on is very impactful, much more than a corporate America stress environment. And having that extra burden of cash be influenced into that environment makes it even worse. And so what was important to us to decide is if we can create a loan program that actually the product of the loan program was to remove that stress, remove some of that anxiety, and allow people to actually just focus on what they're great at, which is performing the job, and do it in a way that helps them, not only giving them money, but also allowing them to not have to worry about making payroll for their employees and how their families, those employees' families are going to eat on Friday because they have to go scrape cash from all these different jobs, and allow them to actually have a 5-6 day work week where they actually are just performing work. So how does that actually work in a loan program? Well, I'm going to give you a quick summary of our mobilization loan program. How it works is we look at your project. We look at your company. The first thing we do is assess your business. If your business is, as I described, you're a good person, you want to do great work, you focus on performance, you just need some cash in order to execute, and you can get all the contracts, and if you have the money to execute on the job, then you're our type of client. We do rely heavily on performance. So we need to make sure that you have at least a track record of performance. I'm not so worried if you don't have the greatest financials. Matter of fact, I don't care if you have the greatest financials on the earth. Most people don't. I know I didn't in the first 2 years of business. So what I'm more concerned with is if we give you the money for a project and it's a good project, can you actually execute on it, and will you make money on it? And if you do, we're going to help you do that. We want to make sure that our loan is used for job-related costs. So let's talk about what that is. That's labor, it's material, it's supplies, it can be insurance for the project, it can be bond insurance. What is it not good for? Well, our money's not good to buy trucks. It's not good to buy or refinance other debts. It's not good to buy a piece of capital. Can we help you with all those things? Absolutely. We can help you get all those things with great referral partners, and then you can even use our loan at times for payments towards those things if you need to, because it's totally appropriate for the job. What we want to do is make sure that these loan dollars go on to the job so that you can complete the work. When you complete the work, you can bill an invoice for it. When your customer pays you, it comes back into us, where we can make sure that you use that money for the project to keep moving forward. We can make a payment back towards our loan for whatever has been advanced so far, and then give you the rest of the money to continue moving forward on the job. And what happens is in the very beginning, we're going to work with you to understand what your job costs are, the schedule for the jobs, and then how, most importantly, you're going to be able to invoice for that job too. Is it associated? Because as we all know, the costs for in a particular month don't necessarily mean that you're going to be able to invoice that amount, because the schedule of values is usually based on a percent complete, but your costs come out of the gate right away. You have to pay suppliers sometimes early. You have to certainly pay your labor every week, etc. So we understand that. But what we're going to do is look at, when do you become cash flow positive? When is there enough cash from the job that you actually can self-sustain it yourself? And when you get to that point, we know that we have helped you, and you can now have us paid back out, and you can now finish the job really on your own. We can stay with you and work with you on it and help you along, or you can pay us back and run through it yourself. So we do have some disciplines around how that money goes onto the job. We really have a back office here. We create an account that's in your name. We fund the loan into that account. It's in your business name and your tax ID, so we're not trying to take, it's not mobilization funding, it's paying your people or doing anything like that. It's your account, your money. We fund it into that account. And then you really treat us like a back office. When you need to use money for the job, you submit a disbursement form to us, which you can do either in paper format or through our website. You tell us, here's my labor for the job, and we can fund your labor account or your payroll company. If you have a material invoice, same thing. Disbursement request, put the invoice together, we pay the invoice for the material supplier. So it's really easy for you to just use us as a back office, just like you would walk down the hallway of your office and talk to your controller and say, hey, can you pay this bill, or this bill's due. And then the last thing is, when your customer pays you, we want to make sure that that money comes back into that same account so that we can make sure the job is protected, you're able to perform, and you can continue moving forward. And again, if we provide money early on, you can then execute on the job using our loan proceeds. When your customer pays you, we can then make sure your suppliers and labor have enough money to continue moving forward on the project, while you also repay the loan at the same time. All working along the same schedule, the same performance schedule, and the same requirements that you have with your contract and what your general contractor and you have decided to do on the project. And guess what? We understand things don't always go perfect in construction world. So those ebbs and flows of month to month, or rain or weather or all kinds of stuff. Other trades get in your way, or other trades don't get out of your way fast enough. All that is fine. We understand that. As long as the money stays on the project and you have money that you need to execute on the project, problems usually are minimized to the utmost degree. It's when there isn't money, or there isn't material, or there isn't labor on a job that causes the real problems and real stress, not only for the project, for the general contractor or the owner, but also for you. And so if we eliminate those issues and problems by using cash available to you to execute, we're not going to, not we, but us and you will work together so that you don't have those problems and you're not part of the problem on a project. You can be part of the solution. So back to what happens next. So we decided that we were going to create a business, borrow money. Guess what? Just like everybody else, we borrow money. When we use that money and make loans to you guys. Early on, it was really difficult to do that because I had to go out with my other partners and ask individual people, some of our friends, some of our family, and had that same conversation that my friend had with me. Hey, we got this great business idea. We're going to go lend money to subcontractors in the commercial construction space. And guess what they said? Hell no, I don't want to do that. So we had to have lots and lots of conversations and explain to them everything I'm explaining to you guys now and really believe it. And we did. And sure enough, luckily enough, we had a few people early on, and then more and more. And guess what? As we got a track record and we put this in place and we made good loans to good customers, and the good customers did the right thing, and we put our disciplines in place. Not that we didn't make a ton of mistakes and make a lot of big ones and some small ones, but 6 years later, we actually do. We have bank financing now, and a bank believes in us. And yes, when I went to the bank after 3 years with audited financials and all this track record and said, hey, can you make loans to us? Well, what do you want to do? Well, I want to take the money you give me and I want to lend it to subcontractors in the commercial construction space. Yep, you guessed it. They said, absolutely not. Why would we ever want to give you a line of credit so you can make loans to people that we would never want to make loans to? And she says, well, let me explain to you why. And we did. And guess what? They made the loan to us. Now, they don't give us all the money we ever need, but they gave us enough. And we used those friends and family and other private investors to help fill the gaps. And so now 6 years later, we're here with a program that we understand, that we know works for you guys. We know removes anxiety. We know gives you stress relief, peace of mind, and allow you to execute on a project. So back to our friend in the beginning of the project. Where is he now? Well, this gentleman was one of the first customers after we opened our first office and we raised some of that first money. And although he had a bankruptcy and although he had a tragic event and tax problems as well and IRS issues, 4 years later, we've worked with this customer consistently on probably more than 8 or 10 projects now. And they have had 2 years of fantastic financials, have net profits of almost $1 million a year. They've been able to execute on dozens of projects over the last 3 or 4 years and have great financials, great accounting, great supplier relationships, great employees, no stress on the projects, and they have as much credit that they need to continue to execute. They have bank lines of credit that they can use now. They have us to fill in the gaps, and they're off and running. Unfortunately, tragedy is bad. but this is a great outcome. And we would have never found this customer. We would never learned as much as we could and should and have from that customer if that didn't happen. And they found us, and now they're able to continue moving forward too. And I think we really have a great relationship. I know we have a great relationship. And those are the types of things that we can do and want to do for everyone else and more people. So I appreciate you guys listening to this today, and I look forward to bringing more stuff to you.